This podcast is sponsored by the asset manager you're about to hear from. Nothing that you hear on the podcast is a recommendation to invest, and you should be aware that the value of investments can go up or down.
Hello and welcome to Ideas for Your Portfolio, a podcast series from Steps to Investing designed to take a granular look at individual funds by speaking to the very fund managers that run them, finding out, in their words, how exactly they go about investing their clients' money. I'm Marcus De Silva. This week, we have the fund manager of AVI Global Trust Plc, Joe Bauernfreund. Joe, welcome to the pod. Let's start with you. Tell me a little bit about your role within the fund and also the wider team that's around you.
Well, hi there, and thanks for having me on. I'm the portfolio manager of AVI Global Trust, and I also manage a smaller investment trust called the AVI Japan Opportunities Trust, which was launched about 2.5 years ago. More broadly, I'm the Chief Executive and Chief Investment Officer of Asset Value Investors, which collectively is the manager of both investment trusts, and I lead a team of 8 investment professionals.
Okay, let's move on to the trust. This is a 3-star Morningstar rated investment trust, a closed-ended fund with over $1 billion in assets. I thought actually maybe let's start with the history because it's got a long history, hasn't it, Joe? It's founded in 1889.
That's right. It goes back way before my own time. I joined in 2002, but I think that history does bring something to the table, that longevity. But I think more importantly, it's about the structure. The investment trust or closed-end fund structure is so important to being able to generate those long-term capital gains which we're seeking to achieve. It allows us to do so within a structure where we are free from worrying about the short-term inflows and outflows, which perhaps our open-ended brothers and sisters have to worry about more.
So this enables you just to take a longer-term view because you're not worrying about having to sell assets at any point in order to fund any outflow. Let's move on to the goal of the trust. What's the investment objective? What's it trying to do for its clients?
Well, quite simply, the objective is to achieve capital growth. And when we make investments, we are seeking to profit from their growth over time. We are long-term patient investors. We're not short-term traders. And we like our companies to pay a dividend. And in return, we pass that dividend on to our own shareholders. But although we have a growing dividend and have been able to maintain it for maintain or at least grow it for many, many years, it's not a primary objective. But we like the idea of paying a dividend alongside capital growth.
Let's see how you go about investing. And I think the big clue here is that you say you take a value approach. What do you mean by this? What is the value approach to you?
Yeah, well, our value approach is different to many other traditional value investors. I mean, traditionally, value investors will focus on buying companies that perhaps trade at low PE multiples or low price to book ratios, or companies that have a high dividend yield. And although we look at those companies, what we're more interested in is being able to buy into particular companies at discounts to their true value, their realizable value. So we're looking at certain types of different structures, things like other investment trusts that trade at discounts, or family-controlled holding companies, which we can talk about, but also trade at discounts. And through those kind of vehicles, we are looking to own businesses that we believe will grow in value over time, but we're accessing them at discounts that can be very, very substantial. You know, today on average, our portfolio is trading on a weighted average discount of over 30%.
So you say yours is slightly different to the normal value approach. We know that now is a good time for the normal value approach. Is it a good time for your approach?
Yeah, absolutely. I think that over the last 10, 12 years, we've seen a lot of capital flow into passive products that just buy more and more of the largest companies that keep going up and up. And a lot of that has gone into high-tech companies, growth companies, Chinese internet companies and the like. So there are large areas of the market that are neglected and overlooked. And that is really what we're looking for. We're looking for inefficiencies or anomalies in the market. And that's where we tend to find discounts appear. And for that for us is the key really to finding opportunities. So today, as markets continue to go up and investors start to become a little bit more discerning and start wondering, are there areas of the market that perhaps are cheaper or better value? That creates or presents lots of good opportunities for us. So we're very excited about the opportunities we're seeing across our investment universe.
Okay, well, let's have a little look at your universe. Now, it seems there are three sectors really that you root around, that you search around for investments within. Do you want to explain a little bit about those and the rationale behind those?
Sure. So, as I said earlier on, we're interested in companies trading at discounts to net asset value. So the first and probably best known group of companies are investment trusts or closed-end funds, of which AVI Global Trust is one. And we're looking within the broader investment trust universe to find companies that are perhaps trading at wide discounts and that perhaps have portfolios that we think have substantial upside. So that's the first area that we focus on. We also focus on what we call family-controlled holding companies. These aren't particularly common in the UK, but they are more prevalent in parts of Europe and Asia in particular. These tend to be listed vehicles that are controlled, or their register is dominated by families who have been around for several generations in most cases. And they tend to own portfolios of assets or businesses, a mix of listed and unlisted typically. And again, what we're seeking is to buy them when they're on wide discounts, when the underlying assets are perhaps undervalued, and to benefit from the double whammy of growth in valuation and narrowing of the discounts. And the third area of the portfolio that also makes up roughly a third right now is bunched together under the sort of geographical banner of Japan. But what we're looking for in Japan is, again, companies that we think are trading cheaply and inefficiently and other investors are missing. And a lot of our focus in Japan is on companies that have good quality operating businesses that are growing their profits, but have very inefficient balance sheets. And by inefficient, I mean that they have balance sheets that are dominated by cash. In some cases, we have companies where more than 100% of the market cap is covered by surplus net cash on the balance sheet. And there's a move in Japan, and there has been over the last 5 or 6 years, to improve corporate governance, to improve balance sheet efficiency, and to boost shareholder returns. And part of that is via shareholder activism, and AVI Global Trust is playing its part in that.
Okay, a good description of the three investment areas there. We know this is a global trust, so how widely are these investments distributed around the globe?
Well, as you say, it's a global trust, and we do invest pretty widely. We have investments, as we discussed, in Japan, across the rest of Asia, parts of Hong Kong, Singapore, and India. We have investments all over Europe, and we have investments in North America as well. So I would say we're a genuine global trust.
And does that mean I'm exposed to the fluctuations in other nations' currencies?
Yes, that's right. We don't do any currency hedging. Our share price is based in pounds, and therefore part of the returns are determined by fluctuations in currency, absolutely.
And what about holdings in the portfolio? Are you very concentrated?
Yeah, I like the idea of running a concentrated portfolio. It's what delivers returns that are differentiated from that of broad benchmarks or indices. So typically we will have between 25 and 30 core holdings.
Okay, well, you mentioned benchmark. What is your benchmark, and do you deviate much from it?
Well, yeah, we absolutely do deviate from the benchmark. The benchmark really is there as an imperfect measure, I would say, for the board and shareholders to interrogate our performance and to see how we're doing. We use the MSCI All Country World ex-US Index, not so much because of the constituents, but more because of the geographic representation and the fact that it covers the geographies that we tend to focus on. But very much part of our thesis is to be benchmark agnostic, to buy companies because we think they're cheap and not because they're in any index. So very, very few of our portfolio companies will feature in a big way in that benchmark index.
Okay, finally, Joe, just give me your view on how you think the economy is faring presently and a bit of an outlook. Let's look into the future a little bit as well.
The toughest questions for last, eh? So I think the economy is in a difficult position at the moment. Clearly, we're trying to get back to normal from the effects of COVID and particularly from the effects of lockdown. And the vaccine, I think, does represent a positive and a good news. And I think that over the year, we will see a strong economic recovery, and that will feed into a recovery in earnings for many companies and hopefully for companies within our portfolio. And given the inefficiencies that we've spoken about, we are positive on our portfolio. We're finding lots of good quality businesses trading at attractive valuations. But I think that some companies will struggle going forward, and we have to try and avoid those and try and invest in the companies that we think will prosper in an environment which undoubtedly is going to be very challenging.
Okay, well, I'm afraid that's all we've got time for today. A very big thanks to Joe for joining me on the podcast. For more information on AVI Global Trust Plc, AVI Japan Opportunity Trust Plc, or AVI in general, please visit their website at www.assetvalueinvestors.com. Also, terms in the podcast such as price to earnings or price to book are referring to accounting ratios that fund managers use to assess the financials of a business. To learn more about investing in general, please go to the Steps to Investing website at www.stepstoinvesting.com. Until next time, goodbye.